Block TV, where it's time for Cryptonomics. Now, one of the main concerns for U.S. legislators when it comes to Libra, that thing in the news all the time, is the notion that it will destabilize the power of the almighty dollar, so to speak, as was evident by the Zuck hearing 2 weeks ago. But listen to us. What if Libra is not destabilizing the dollar, or doesn't have the potential to do that, or to do it alone? Rather, the U.S. itself is doing it by itself. Case in point. The U.S. debt just reached $23 trillion, and the Fed is just printing more. I am quoting none other than our senior correspondent, Asher Westropp-Evans, with that ridiculous number and what it means to the almighty dollar. Yes, convince me.
You know, yeah, it's always fun to set records. This new one, $23 trillion in debt, another new record for the United States, whose debt has just been skyrocketing for a couple of decades now and just continues to climb and climb and climb, even in this time of financial boom, at the end of the massive expansion, record-long expansion in the United States. The US is still at some of the highest levels of debt, over $1 trillion in debt annually. Staggering figures.
Staggering figures, and as a former New Yorker myself with that number, I remember that floored me in the early 90s with that number moving so fast.
Right.
As we see right now, by the way, that's the U.S. national debt rising.
That's live. Rising live. And so to put this all in a little bit of perspective, what this really means as well, because a key point for your average sort of user of the dollar, what does that actually mean, is that the dollar itself is losing value at an unbelievable rate. So the classic chart that gets bandied around is the statistic that in 1913, $100 in 1913, today is worth below $4, $3.87. That level of inflation has just skyrocketed over time. It has caused the value of the dollar to simply plummet. And as a consequence, when new money gets brought into the economy, when new money gets printed and developed, the quantitative easing policy, as they so euphemistically named the policy in the wake of the global financial crisis in 2008, where the Federal Reserve simply printed more and more money to flood into the economy, has caused the amount of dollars in the system to absolutely skyrocket, and it's not being trickled down as certain presidents have said in the
that's a great explanation of why then the value, why it's devalued.
Exactly.
Or why it's being devalued. And printing, apropos, seems to be something that the Fed and the U.S. is quite fond of.
Certainly, very fond of. But the reason now that the inflation rate in the United States isn't simply skyrocketing as happened in various other times of mass printing, we're talking Weimar Republic, we can even look in modern times, we see in Turkey, we see in Russia, we see in Argentina, the countries that have tried to, Venezuela, Zimbabwe, countries that have tried to print their way out of economic troubles. The US can get away with it because the US is the global current reserve currency, the global unit of account. And countries around the world buy US government debt, they buy US government bonds, and they take up dollars and effectively soak up that inflation so that the US isn't straddled with masses of debt. Now, this system has worked great for the US since Bretton Woods, since the 40s.
It has.
It has worked very well, but times
we're
are
in a
changing.
New technological, exciting
age. And so what's happening now is we're seeing a number of countries, we're talking Russia, we're talking China, and we're talking even the EU, that are trying to effectively de-dollarize their economies and move away from the overwhelming constrictions of the dollar for a number of reasons. Namely, because the dollar now has, in the wake, actually, not to get too many facets working along here, but in the wake of 9/11, when the Patriot Act was passed, a very important element of the Patriot Act that doesn't often get talked about is the US's new powers to look over US dollar transactions. They have incredible powers, even outside the United States, to control US dollar transactions.
Or as they put it back then, when they passed it, somebody actually in the media said they can do anything they want.
Pretty much,
exactly.
Money. And that wasn't such a problem for the US allies back in, US and allies in 2001 when there was a unified, cohesive sort of strategy in the world. But now, the current latest example was the Iran sanctions, in which the US unilaterally pulled out. The rest of the players stayed in, and suddenly they were hit with secondary sanctions. Suddenly the EU, private companies in the EU that are doing business with Iran, legal under both Iranian and EU laws, are suddenly being hit with secondary sanctions, or the risks of secondary sanctions from the US, because they're doing that deal in dollars. Because oil, 90% of all oil transactions are conducted in dollars, because commodity transactions are primarily conducted in dollars. And now these countries and businesses are going, hold on, we don't want to be beholden to this country and this system that's no longer aligned with our values, and they've looked to alternatives. So where are those alternatives coming from, Yael? I'm glad you asked. So, of course, we've got the new emerging digital trends that are coming out in technology. We've been talking for months now about China's central bank digital currency that they're looking to develop. And they want to be movers. They have created effectively a petro yuan that they want to use to be able to be the unit of account for commodities trades in oil.
In oil, and I was about to say,
around the
just
world.
to remind people, not just the petro yuan, but the idea of oil being tokenized is one thing that will most likely not just move this crypto economy forward, but will change the geopolitical power on its head.
If you no longer you consider the US dollar as the unit of account for oil trade, then there's a whole wealth of options that gets opened up for other countries, and the dollar loses significant power.
Might even prevent some wars, but there I'm just being,
Perhaps, that part I won't speculate on, but there are, incredible powers that can be taken, and China has been moving to do this for a long time. They have futures, oil futures being traded in yuan. They've been trying to indicate that, hey, there's a potential change happening, there's a potential move happening.
And there is one also coming very soon.
Exactly, and then we get into the crypto elements. As well, looking at the EU, ostensibly a staunch ally of the United States, you'd think they'd want to continue trading in dollars. Not so. We've just had recently an association of over 200 German private banks calling for a digital euro to give that power to the EU and to give that power to the euro to say, hey, we can do these trades no longer in dollars. We can cut out the US dollar system in this mechanism, cut out the oversight that the US dollar power has and the US Treasury has over these dollars, and start doing it in a digital euro.
And to be honest, I think there's nothing Europe would like better as to actually cut itself away from the dollar.
Absolutely right. But then, Yael, you got to look onto the secondary effect. So Russia is already moving itself into gold. They've de-dollarized their economy fairly successfully. Say China manages its success, a worst case scenario with, or best case scenario for them. They move into a digital yuan, renminbi that they have full control of, and they're trading their commodities in that. Say the EU moves into a digitized euro, and they're doing all that. What happens to all those dollars that have flooded the system for the last decade? That have for years now been absolutely accruing in the sovereign
printed masses of
paper. Those sovereign funds that China is estimated to own trillions of dollars in government bonds, U.S. government bonds. Saudi Arabia similarly as well. Throughout Europe, there are trillions of dollars of U.S. government bonds being spread. Say the dollar loses a lot of its considerable value around the world, and those countries decide, we want to diversify. We want to start selling some of those bonds. We want to start pumping it back into the U.S. economy. The potential inflation levels could skyrocket, Yael. The U.S. could face a debt crisis that they of their own making that has been building for generations, that have been like a sponge absorbing up into these other economies.
Sounds almost like a doomsday scenario of crypto enthusiasts.
It does. And look, let's not get too dramatic. No, that would be a lose-lose situation for the entire global economy.
Let's argue that we don't really want crypto to rise because of the failure of others, but still.
And the U.S. economy, let's not pretend, it's still the largest economy in the world. It still has incredible influence and power in the rest of the world. And if the US were to go down, as we saw back in 2008, everyone else goes down with it.
Exactly.
So this is not by any means some ideal scenario, but from a crypto perspective, we have to look.
We have to look, and actually, because of what you just said, I'm assuming that both the EU, China, it has its own agenda, want to distance themselves from the dollar because this can't continue.
No.
It cannot continue.
It's completely unsustainable into that longer term. And as much as there are economic theories, we've got modern monetary theory that suggests that the US can just keep printing money because it's a fiat, and as long as they're taxing enough to keep the balance equal, they can do it.
The rate cuts.
Exactly, but that's simply not how it's being played out at the moment. It's this sort of global sponge game of US dollar value, which is still, US government bonds are still considered by far, and rightly so, the safest investment vehicle out there in the world for people to store their money. But Yael, the potential impacts of this and the potential advantages of crypto are so much so. When you have Bitcoin as a prime example, a deflationary asset that does not grow, has a capped maximum, as gold does, as any of these safe haven assets have, Yael, it's a very powerful tool, and one I would definitely say might become much more useful.
More useful, not if it's up to, dare I say, the U.S. Congress. No. Sadly, but it's one of those breakdowns that I wish somebody up the hill was listening to right now. Asher Westropp-Evans, thank you so much as we looked at the value of the dollar, or the devaluing of the dollar. This was Cryptonomics. We are BLOCKTV. We'll be right back.
For more news and updates, follow us on Twitter.